Hello, hello. Wait up. Test, 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 test. Can you hear me? Hold on. I might have the wrong speaker set up. 1 second. Hello? Test, test. Beautiful. What's up, man?
I'm fine, and you?
Very good. How's your week going? I saw your picture. You live in the Netherlands? It's beautiful there.
Yeah, it's raining, but yeah, it's beautiful.
It was raining here yesterday. I have a few friends that live in the Netherlands. So that's really
Oh,
cool.
really?
Yeah.
You come visit us?
I can't visit.
Yes, you can come here.
Ah, yeah. All right. So you're home now. Baby's in bed and everything. Yeah.
Yes, yes.
Good,
I'm
man.
fine
Good.
now.
I'm glad. I'm happy for you. So yeah, what's up? Can you see my screen very quick just before we get started?
Yes, I can see it.
All right, cool. So as you know,
It's your algo.
yeah, it's my algo. I just have it open because it's all I'm trading right now. Nothing on the FX. Useless,
Yeah.
useless, useless, useless. Like if you remember the webinar, just nothing except for maybe EG, but even that one was nothing. So just nothing to do here. So I just been trading the algo this morning, but it's been going well. So very quickly, I was gonna say you can see my screen too and everything, yeah, and you can hear me. We're good.
Yes,
All right. So very
yes.
quick, as you know, this is recorded. You can decide at the end if you want it uploaded or not to the public. Not public to the
Okay.
public private area, right? Or you can just keep it for yourself. Either way, it's up to you. You're paying for it's your time. So perfectly fine either way. I don't hold either decision against you. Very quick, as always, if it does end up going there, trading's very risky. Anything we talk about today is to be viewed as only demo environment, perspective based. Most people end up losing money in these markets, and this is just my perspective, and you shouldn't take any action from it in any way, other than what you choose to do so with your own responsibility. All right, cool. That's out of the way now. So yeah, man. What are we talking about today? What's on the mind? What brought you to sign up?
Yeah, it's because of drawing the ment blocks. I did it a lot, but somehow I'm still confused sometimes which block to draw. And yeah, I can show you some examples if I'm allowed to share my screen.
Of course. Um, is there some more stuff, or is this the main thing you want to just start with and then see where we end up? Because it can take a while. Like,
Yeah, yeah, that's the main thing, I guess.
all right.
I know the rules, I know your rules, I know
Yeah,
the
so
rules of
we'll
refinement, the
we're
rules
gonna
of
we're gonna
MBs.
re-break the rules down. We're not gonna make it super long, but we're gonna re-break them down so we can take a look at a few areas, right? Because you're now one-on-one with me, so we can specifically look and then see where maybe there's misunderstanding that's going astray and where we're missing something.
Yeah, that's good.
All right, cool. So what I'm going to do instead of having you first of all start on your screen, unless you really want to, then it's fine. I'm going to go ahead and just find random areas and just have you draw on my screen with the annotate. So if you go up here and find annotate, you should be able to draw.
Mm.
Do you want to do it that way, or do you want to start first?
Uh, uh, yeah, I think we can do it your way, but I still want to draw like I did, so I have
Yeah.
the answers from my as well. So we have to take care of the time.
Okay, sure. So let's just start with my side on the screen share first. We'll just go through some examples,
Mm.
hover over any questions if there are any, and then we'll jump to you, okay?
Okay.
Okay, so um, as you know, I have specific rules that define for me where I'm going to draw a mentfx block or where I'm not, right? From the very basic, right? There's going to be other rules around it, like SND 2.0s, right? And how you draw MBs from that.
Mm.
But the first thing we need to do is we need to recognize that every independent time frame, no matter what time frame you're on, 4 hour, 3 hour, 6 hour, 5 hour, 5.666555 hour, if there existed something like that, whatever time frame you're
Mm.
on has its own, in any given point, independent ranges. And we define those ranges using the pullback rule, right? And by using that pullback
Mm.
rule, what we're basically doing, in my version of thinking about it, is we're looking for the last time the composite operator or smart money or big money, whatever you want to call it, sold into to buy or bought into to sell in very large ways, right? So when you have, from a very, very basic standpoint, when you have a structural move, whatever. Like, let's just something that looks more realistic. So, like there's structure looks something like this oftentimes, right? Like, so you have like some kind of structure move like this, generally bullish, kind of going back and forth in terms of, up, down, whatever. And then eventually you have some form of a, let's say, break to the downside. So let's say it plays around and then it breaks down, right? A lot of people in this given moment, as I did as well back in the day, would take this as the high and this as the low, which is okay. You can still be profitable doing this kind of thing, but over time, I started to recognize what zones would hold much more often, what kind of data points would actually either decide whether price wanted to hold themselves, or as they get above it, if it's ready to just go long, right? And this is important because you're going to have some markets where, this high could be all the way up here, right? Let's look at EG for one example, just off the top of my head, right? Like you have stuff like this where if you're watching, let's say this daily, and this is the break of structure here, right? The second this break happened, I'm already looking at this high, right? A lot of people, so this is the high I'm already looking at. A lot of people are instantly looking at this one. And even though it's not fully wrong, right, what you're doing is you're allowing all this area to act as area where you might have to like do nothing, wait, or be wrong multiple times, right? Because you don't know where the actual move came from. Because eventually a market can get to a point where like the break here was caused by this low. And now you have to focus on all of this stuff inside, right? So for me, over time, I shifted from
exactly,
that. Yeah. So
that's
over time,
exactly
that's why I had this kind of shift occur. So in this specific example, right, when I look for my rule of a previous candle, so in this case, we're looking at a bearish, right? This is a bearish move. So let's just define that really quickly. This would be a bearish move, right? Bearish. So in the case of a bearish move, what I'm looking for is the last time a candle displaced, aka had a candle body above a previous candle's high, right? And the reason for that is what it's showing me is in that given moment before a breakdown occurred, right? Because again, we wait for a breakdown and then we look for where this happened. What it's showing us is that the composite operator or big money entered their largest buys in that were enough, that were strong enough buys to displace above previous, given highs in this case, like this one right here, displace above it before pummeling back down, which means that in the case that we are to retain this bearish push and come up into an area, I would expect the mitigation to occur right here, right? Or in the refinements of that, because that's where the original huge buys came in, right? Huge buying orders come in so they can liquidate above the highs, get into sells above those highs, start taking it down. Now there are negatives on the buys, so they come back up to those buys using the liquidity here to close the original buys that they used to manipulate to either continue a trend or to keep going up. Doesn't matter, right? This either one can happen. This is why ranges fail and zones fail. It's not always about it, right? That's why sometimes you might see a little push away and then a continuation up, right? Because they use that area to mitigate those previous orders and then they push up, which is why, I'm sure you've seen it, if you ever have like a monthly and you find any monthly zone in a range, it's almost always guaranteed to have some form of mitigation before it either completely fails or continues, right? And that's because those orders are being closed over that given time. So the higher the time frame you look for a zone on, and then you jump lower, the more chance you're going to get an actual bounce from there, right? Like comes in, that's your bounce that you get from there, right? So that's where that comes from. So the idea of the rule stems from this thing, even though it might not be important for you. I think the understanding is really important because when you understand the theory, you stop worrying about using like this high or the wick high here or whatever else, right? You're focused on, right, this point, which was the thing that held up a bullish market that has now been broken. And in that moment on this specific time frame, let's say call it X time frame, this is time frame X. When it breaks this, what it's showing you with that rule is that the orders that came in, the buys before sells, came in right here. Not here, not here, not here, not here at the unmitigated zone, but right here. Because that's where it was enough to displace back above a high before a huge sell down happened, right? That's where the real orders came in before the move down occurred, right?
Yes.
So that's where that's just the basis of the rule, the theory of the rule, just to keep that as a starting point. Now, the thing that's important is that no matter what time frame you're on, they're all independent. And this is going to be true across every single time frame. And all time frames, even on the same market, are going to have different ranges that they exist within. And our job as traders or as people that watch for the footprint of smart money, as we like to say, Well, our job is to use those multiple time frames to formulate a plan and story around what's going on. And when the story lines up, like let's say, this was a daily right here. This was let's go gray. So this was a daily breakdown, right? So there's your daily break, and then the lower time frame comes back into here and starts breaking down on the 4 hour, or maybe it doesn't break on the 4 hour, but starts breaking down on the 1 hour, right? And the 4 hour is still bullish. Well, even though they're all different and some are showing bullish, some are showing bearish, the anticipation of context can allow us to start even following the sells on the 1 hour or like even 15-minute to start going short, right? Because we're now disconnected from this idea of time frames and more connected to the idea that there are ranges that exist across the board. Those ranges are representations of orders. And by looking at those ranges independently and putting them together, we can formulate a story that's either A, worth trading and executing a system on, or B, worth looking away, right? So that's kind of the thought process that I personally utilize when I do like an outlook. And I'm like, I'm not going to look at this. I am going to look at this. This works. This doesn't work, blah, 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 right? So that's just the first standard theory behind why I'm using MBs the way I think about them, why I'm using these points instead of like, back in the day, I might have done something like this. Oh, break a structure, low, high, right? Now, over time, even if I'm zoomed out, if I look at this break without even using my rule, when I look at this break, I'm saying, where did the buys come in to force this price down, right? For me, it's really here. Right? You see that? Because you can see the clear buy up before the huge force down. So theoretically, if this bearish move wanted to hold itself down, I would expect it to hold itself down under here before, so hold itself there. Or if it broke it, I would expect it to be losing its trend and potentially be reaccumulating, right? Which is why when it broke it, I expected the longs, right? And then again, as you follow this, you get this break up again, and you can ask yourself, where did that move come from? You could argue it came from here or here. I would probably say here based on like just by zooming out, you can see the clear down move, right? Before the up move. So you can see how even from a zoomed out perspective, this rule can be applied, right? Like for instance here, there was a break of structure. Now, if we went in with my rule, there's probably a low here, but just based on this, right? Some people would say this is the low, but even for us, we can say that this is clearly a huge sell-off, or here's the sell-off before the huge buy up. So if we want to retain a bullish push, we should be retaining it from this MB or the refinements of it, which is what you see, right? Price comes into the MB, into the 50% refinements, and from there takes off to now clear another high, right? So this is just, without even looking at that rule of displacement, this is what you're kind of viewing, right? So notice how you can see it without having to, you can like see it from zooming out, right? But then we can go the next step and we can define actual rules for seeing this, right? So theoretically, someone following my rules should be able to see the exact same ranges as me, right? Which isn't everything, right? There's people that have literally seen the same zones as me, the same ranges as me, and still are not profitable, right? And that comes from the fact that they might be doing that on all time frames. They see the same zones as me on all these time frames, but the difference is they're probably trading every zone and everything inside, and I'm just still on this going, I'm waiting for my sells on EG, right? So it's not so much always about the fact that you're analyzing correct, just like mentfx or whatever. It's more so about how you then utilize the analysis you have to then, actually execute your edge, right? The best way to think about this is, as I like to say sometimes, I have probably I'm sure you've seen a lot of the webinars now, I have probably an 80%, maybe 70 to 80, 70 to 90% prediction rate, right? When I tell you EU is probably bullish and it ends up going bullish, I'm almost always correct. When I tell you it's going bearish and it's been bearish, I'm almost always correct. Like I'm pretty much correct 7 out of 10 times if you've watched my outlooks. Yeah. However, that has never meant that my win rate is in those numbers, nor does it mean I'm in those trades, right? So even though the analysis can be correct, which a lot of people actually can do, some people, that take a little bit of time to learn basic analysis, even support resistance traders that are like, break and retest, I expect bearish. 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 Oh, it broke up. Now I expect bullish. So even if you're a very, very basic break and retest trader, you can still have a general good understanding of where the market is likely to head. But because of all the other things that come with that, like forcing trades during a given market, forcing things back to zones, right? So a bullish trader here, right? So there's a lot of retail that's bullish now. But what they're doing is they're looking for sells right now to get back here. And the thing is, it's probably going to keep going until they go, oh, it's going to sell here. And then it's going to go through that. And then they're going to buy here. and then it's going to be bearish into now bullish. And then they're like, oh, I was correct about my direction fully again, but I'm never in the right trades, right? So that's where this kind of stems from. You can be correct about predictionary markets, but it doesn't mean your win rate's at that level of prediction, right? Because that's going to be affected by the way you're entering and stuff, right? So let's jump to something. Let's just go through just like whatever, like GU. We'll just go back to wherever, 4 hour. Doesn't really matter. And I'm just going to basically go somewhere like this. And I'm going to ask you what the current range we're in right now is. So just, so do what I teach you, you know, go and open the annotation tool. So you can draw on my screen. And I would say just start like here at this low. And from there, try to pinpoint the range we're in based on the idea of left to right, right? So I just want to see what your thought process is when you do that.
Where do I find those tools?
So if you go up here to the little zoom thing, there should be an annotate, or if you press on more, there could be an annotate in there. It should be there. It says annotate.
I have here chat, record, reactions, apps.
No, at the top, you know, you see this little panel here?
Yeah, I only see a trading view screen now.
Oh, you don't see this little panel up here on my screen?
No, I only see the chart.
Okay. So on your screen, is there a panel on the top?
Let me check.
So like put your mouse on top of your screen, entire screen. It should be up there.
Ah, yeah, I see. View options.
Yeah, and there should be like an annotate button.
Yeah, I have it.
Nice. Yeah, so then click on draw, do whatever color you want, try to make it something that I can see, and then start from right here, basically. Like with your best ability, I want to see where you end up here or here, like whatever range you end up in, I want to see what you would be thinking based on everything I just taught you. And as you do it, even though it seems kind of childish, walk me through the rule. Be like, you know, here it displaced, that means that this is where they bought to sell. So the high after that is, you know, the last possible point of protection, whatever, like do it like that. And no double MBs, we don't care about that. We just care about the immediate range. We'll talk about the double MBs after, but right now we'll just start with that, okay?
Okay, so here the first MB is broken and we checked the last buy for the sell. So where the candle body is above previous candle.
Yep.
I think this just or just not. I cannot see it really, but maybe. But otherwise, definitely this one.
So I only see what you draw after you let go. Only after you let go.
Okay.
Yeah.
Oh, you don't see my arrow.
Yeah.
I was in doubt about this one, but I cannot sure. But I think it's this one, and then we look for the most recent high, so it doesn't matter at all. So it's this one. It's the protected high.
So just looking at it, I'm pretty. Did this close above? I think this did right here. You see this?
Oh yes, I see. I missed it.
Yeah. So again, so tiny things, but let me do this instead, so it's easier to see. Yeah, you can see it did close above it. It's pretty. It's like for me it was clear, but it might be hard to see. So let's start with that range, right? But again, like even as we do that, like notice what you see, right? The buy before the sell. Here's your MB. Right, this is where your MB would be now. You see, this is the MB. And you see what price does before it continues to the next one? Right?
Yeah, it mitigates that.
Mitigates the MB or the 50% of it, right? Beautifully. Right, so again, just showcasing, again, just the rule being used and then finding the MB of it, and then again, we can refine further, right? This is the idea of webinar 77, right? With all the refinements that we spoke about, right? And MB is its own unmitigated zone. It has unmitigated zones within it. Mitigated zones have unmitigated, all the fun stuff, right? So here we go. Start again for me. Go ahead and then follow me through from then.
Okay, so we are here. Then the last. This was the protected high.
Yep.
There, this one broke. This one broke here, and then we look for the same candle body above previous high. I have to watch properly. I think it's this big one with the big volume.
You have to let go so I can see it before you, so I can see what you're looking at.
Yeah, I think here the rule is met for the first time.
Yep, I agree. So now, before we even continue, so what would just the general, very general MB be of this range? Right, what would the MB be? The main MB, nothing refined, no refinement at all, not volume refinement, nothing.
This one.
So personally, kind of yes and no. So for me, it would be this low to that high, right? Because this was still created by this push up, right? This is the low we're using until displacement for me personally. But once it's displaced, right, this move is coming from this low, right?
Yeah, that was exactly one question I had, because this sometimes confuses me.
But there's some times where you can play around with that, because what happens is sometimes, right, let's say this displacement could have closed here, and then this is below it. So now this clearly can't be the MB because it's not validated yet, because this is the validation, right? So this closure is above the validation. So in that case, the argument would be that this right here is the MB. You see that? Because that's where it pushed up. So that's where a little bit of refinement will come in. But in this specific case, because we're getting below that, well, the main MB, the one that's no refinement at all, sorry, you had the break here, you had the high, the low, just broke. So on that break here, because it validated this, and this is the high, well, the main MB without any refinement is that, right? You understand that? We understand why too, right?
Yes.
This is all good. Okay.
Yeah.
So, I mean, in this case, nothing never made it up to it, right? That's fine. But let's keep following it. So what's next, right?
Yeah, so now we have a big down move till here.
Sure.
And I just follow structure now.
All right, so here we go. So here's something that's really important, right? So it's cool that you saw the low, but you didn't follow the move, right? If you keep following the move, notice what happens here. And then another displacement. So we created a brand new bearish range here, right? Because the rule was met, and then we broke the next low, displacement. So now, once again, the main MB would be this one for like bearish moves, right? That's it. And now we're in that range, right? But again, just by missing that, you still see yourself as being in this range, right?
Yes.
Yeah, so again, notice how, again, the rule doesn't change. The rule is right there, right? But we need to be aware of everything that's going on. We're going left to right, so we need to kind of keep our mind in effect, right? Like, so personally, if I was doing an outlook on this right now, I wouldn't have to look at all this, right? Because I would just look here and I'd probably say, like, this broke, made that low. Clearly, that low got displaced later. You know, displaced, came from this high, which was this high, and then boom. Right, so I could get to that because I understand what I'm looking for, right? Like, I'm just used to doing it, so I know what it's going to show. But as we do this from the first time, you need to get very used to spotting these moves in here, because again, what are they showing you? They're showing you stoppages in price, buy-ups that are strong enough to take out, again, the buyers in a way that displaces above them, and then the sell through. So again, this is going to act as that area that either is going to be mitigated for the purpose of, or this is MB, but before we refine, to be mitigated for the purpose of continuation, or to be mitigated and then again fail, right? But again, really important, because again, if you didn't notice that, right, and you were trading this live and the market was here, well, you'd be waiting like for this or for this MB still. Yeah. You'd be waiting for this. But
probably.
The reality is, you know, at this point, you might already want to be, you know, so when this break happens right here, which is going to be our next point we're going to talk about, and there's the MB here, you're never going to be even seeing this. And that's a beautiful opportunity. Like, look at this opportunity. This is random too, right? We picked a random area, random chart, random time frame. But again, we miss this entire move because in your current way of looking at it, if we miss this, you're still in a left to right from this high to this low, which means it never got invalidated. So there's nothing to follow. So for you, this is all intermediary. And for me, this is all very important price action, right?
Yeah. I get it.
All right, keep going. So there we go. So delete this one, like press the undo for yourself, and then put it here, and then keep following it for me, and keep talking me through it.
So
Nice.
here, this one breaks.
Mm-hmm. And where's the low
Then
of that range before we continue? So we're gonna always determine our lows.
how do you mean the low? This is the low of the range, or how do you mean this one?
Yep, this one. That's correct, right? Because again, so what am I? Remember what I said, right? What am I always looking for after a break? Right, so after a break, I'm looking for a swing low, as I call it, right? So oftentimes, if you follow this, here's a low with 2 higher lows on each end. So that would become that swing low, right? So that would be the next point you want to see broken, right? Similarly, if you go, actually, no, we won't even go there. We don't need to do that right now. But we're marking this out because we want to constantly be aware of it. And now that you have all that, what would the main MB be of this move? The main MB, no refinements, nothing like that. I'm just doing this so we can just visualize it.
We just talked about.
Yep, exactly. Now, the reason I'm making you draw these MBs, right? So it might seem counterproductive because you're like, well, we could just draw in the break of structure, right? We could just draw that in every time and the MB doesn't really need to be used. But the MB is showing where the main orders are, right? So for instance, on a lower time frame, it's very possible that this tap could be the last tap. And a lot of people at that point will be very confused. They don't know how to follow this. They're like, but my zone's here. Without understanding that the MB was already mitigated, and this could be the move that brings it to new lows again, right? This is what happened on my actually really good EG trade. So let me showcase it really quick.
Yes, but if your system is telling I wait for 50% of the MB, then you're missing it, of course.
Yeah, but like here's where this move came from. If you remember this, I sent out this range right here from this high to this low, right? Remember this break? I don't know if you remember, but I sent this guy out. You'll go and see it after. And a lot of people, if they're just viewing just the basic break of structure, boom, break of structure. Okay, that's all I need, and then I can find my S&D, very easy, boom, and I'm good to go. There's nothing that ever happened there. And a lot of people are going to get confused when this might not move in their way, blah, 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 all this fun stuff, which is why I'm constantly telling you to draw the MB first, because I see this even when I don't draw it. So when I saw price doing this, if you remember, as it moved away here impulsively, I used the mitigation of this MB that no one would have thought to draw to send out
2.0 in that.
Yeah, exactly. To send out this S&D refined, right? Which was a perfect tap, if you remember. And that was where my sell was. So the reason I'm teaching you, even though it seems like counterproductive, like why don't we just draw the break of structure? The reason I'm telling you need to draw the MB is because you need to start visualizing where the main orders are coming in. And when you do that, you're not just viewing the one time frame, right? Because when you get this break of structure, like let's say right here, when you get this break, boom, let's say you got this break, you already know that, you have your main move where it's coming from here, but the main move is this one right here, which what you're doing instantly is you're viewing the actual last up move before the down move across multiple time frames now. So this is why I say time frames don't exist, because this right here, this zone, isn't a 1 hour zone. It's probably not even a 4 hour zone. Like we don't even know, right? We can find it if we want to, but like, look, okay, so it is a 4 hour zone, right? But we don't know that. And not always will our MB line up with a zone. Sometimes, right, we might have a daily MB, like this one, that might not line up with any other time frame, right? Which is why so like here it's hard to line up. Maybe this hidden S&D, maybe, but that's again an MB. Maybe a weekly or like a 4-day, right? Nope, just misses it by a little bit. A 5-day, it's a hidden S&D, a 6-day, right? It's a hidden S&D. So if you're looking at all these time frames, it's going to be very hard to locate that. And you're able to locate and see that just by understanding how to properly think about MBs, right? So what you're doing is you're viewing, again, not time frames, but actual orders. So when certain price happens, instead of sitting there being confused over what's going on, you can still attribute a certain move to what's going on. And, you might not be able to participate in it, but you know what's going on, right? So when I looked at this 1 hour range, I didn't need to go and find that this was a 4 hour zone or a 3 hour zone or a 3.5 hour zone or a 760 minute zone, right? Because that exists. Here it is, 760 minutes. Oh, look, it is a zone on the 760 minutes. That was the real zone. If you need to find the 760 minute chart or you're not going to be profitable, there's no such this is what when you hear me say the whole time frame shit, like, oh, time frame zone exists, blah blah blah, this is what I mean. You're viewing orders, and when we think about MBs, we learn and teach ourselves to see the entire move, because that's what's going to help us refine, right? Because when we see this as an MB, then we also know that 50% of it, look at that, lines up with that MB, and 50% of that is lining up with some unmitigated portions potentially there, and that's where price comes after, right? And again, now it makes sense to use a zone this large in relation to the range, and now we have a sound plan, right? So we don't always have to confirm this huge zone, but we're also aware of what's happening, right? So that's just something I wanted to make sure we get as to why I'm making you draw these. Like, it's not just for fun that we're drawing these guys in, right? Let's go back to the 4 hour. Let's find out where we were. Oh no, I forgot this is how that works. Okay. I think we were here. Yeah, we were here. Boom. Professional. Okay, so that's the MB. Very good. You located that. Now let's keep going. So what's next?
Yes. So now this MB is broken, and now I'm looking for the sell before the big buy. So a candle that's here. The rule is met.
Okay, so here's probably another area where you're going wrong then, right? So I see where a lot of issues might be coming from. When you see a break, okay? So when you see a break right here, right? The first thing you should do.
I see it.
Yeah, it's right here. I know, but this is but this is great, because now you're gonna learn something or take something with you. The first thing you should do when you see these displacements isn't look down here or here and start following. You look directly at the candle and you go back from it. And you go, was it met here? No. Was it met here? No. Was it met here? Boom. That's it. Everything here, out of existence. I don't care about it. Done. As simple as that, right? Because a lot of us as traders, when we see something happen, we want to attribute it to anything. Like, boom, break must be from that high. Done, right? Whereas I'm looking at break, it's clearly coming from there. It's met. Use the high after. Done, right? And everyone else is stuck looking for the real high, the real high, the real high, support, resistance, 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 resistance to pay, maybe trade. And everyone wants to catch whatever the main area was, instead of allowing them just to look at the immediate and where it came from, right? Break, look immediate, find, follow, boom, met, done. Nothing else here matters. It's not going to help us in any way. This is where the rule is met. After the rule is met, we have S set. What does that mean? We can now follow SSC, structure. Right? Structure S&D confirm. But we can't just but if we go back here, right, we're starting to use this without the structure, right? So once we have structure set, we don't care about any of this. It doesn't matter what it did. Now, over time, right, we're starting with this understanding, but over time you're going to include rules of double MBs, which means your ways of thinking about this is going to shift a little bit, right? Because you're going to have like a double MB. And let's say this one might come from here. So this could be a protected high, and this could be a protected high at the same time. But this area here is useless, right? So it's an interesting way to start to think. So if you had like this double MB, you're witnessing and thinking about structure from section 1 perspective. You have this range, which is valid to trade, and this range, which is valid to trade. However, within this range, you're only trading, here or the MB that created that. And within this range, you're only trading here or the S&Ds that created that, but you wouldn't ever touch it inside of the unmitigated portions in here, right? So this is where that double MB rule is starting to have a little bit of nuance, but you're still applying the same thought process of that price action is useless and doesn't matter. And just like here, this right there will not matter. All that does not matter. You see what I mean? But this can matter, and it's still in that range. You see that? So you within a valid range, like let's say we had MB1, MB2, right? This MB2 came from this high. This MB1 came from this high. Okay? Again, I did that quickly, but the rules are met there. So if you're rewatching this once it's uploaded for you, you'll be able to just take back and find that rule, and you'll see where it's coming from. So we have this high and this high. Now, even though both of those are true, I mean in this case it's fine, but what's happening when you have this double MB here, right? You have this as a valid MB and this is a valid MB, right? Those are all valid areas to now trade in, right? So theoretically. Now, again, as per webinar 77, if you wanted to have a much better chance, you would take the second MB and then refine it, maybe to like here. And then your entire system could just say, I only want to see a sell here. And that could be your whole thing in this entire range, because what you're doing is you're viewing this as range 1, and at the same time, you're viewing this section 1 material as valid range 2. You see that? So both of them are a valid bearish range, but they within their own ranges, they have respective areas within which you will confirm, won't even use, or won't even consider, right? And a good example of that, so I want to actually show you an example of this situation here, happened. Can I think of something where it happened on recently? Maybe I'll have to just find it if I can't think of it. I think it happened on, let's see if I can find a quick image in mentfx trade ideas, because I send out stuff all the time. That's all good. So this is actually an example of what we just spoke about right here. You see that? Where this is the analysis I just laid out for you guys like this weekend, but break up, break down MB1, break down MB2, and we have a zone, and both are valid as part of that range as range 1. And this range from this high to this low is range 2, and then we confirm the inside zones of those, right? And then nothing happened, whatever. So this was the exact same thing that I showed you right here. That's the exact same idea, which is, again, really cool because you're going to start seeing that everything is just a repeat. But the other situation that you can have, for instance, is, I think I sent it out in like a 1 minute. Here, let's see. We had a break. Then we had MB1, broke down MB1, broke up MB1, MB2. Okay, no, this is all fine. Okay, this is a perfect example. So look at this. Can I copy this? Unable. Okay.
Open original.
Yeah, it's all good. So let's delete all this for just a second. I'm trying to keep this stuff on here. Here we go. Okay, cool. So in this situation, right, you have, again, the same thing. Very simple, right? You have MB1. Let's go red, bigger. You have MB1, right? And again, like I would ask you, let me ask you really quick, is this the main MB, this one, or this one?
I have to check where the rule is met.
Yeah, so the rule's met. This is the high.
Yeah, so
so it's always this one, right? Because remember, it's the break. This is the break, so this is the MB right there, right? That's the main MB. So you have MB1, and then you have, it plays around, pulls back, so you can see there's no pullback here. This is all like what I would call intermediary, right? The rule's not met, all good. And then makes the rule, and then breaks, boom. Okay, but then notice that the rule isn't here now, right? Again, if we break, follow it from the candle, follow it, boom. So this is the high. So what's interesting now is that we have range 1 and we have range 2. And even though they're bearish ranges and we're good to follow for shorts, this right here is completely useless and not important to me. But for a lot of people, because it's clearly in the bigger range, they're going to be like, well, I have to trade here or this big MB, right? But again, we need to follow the rules. It always starts with the rules. What range are we in? Rule met, that's the range. Is this S&D within that range? No. Rule 2, where's the range? Here. Is this S&D within the range? Yes, it technically is, but the move that created it and the S&Ds that created it come from here, right? So this is completely worthless. So this is one of those examples where this area here becomes not important. You see that? At least for me, this is my way of viewing it, right? Because the buy before sell that's holding this range came from here, and the buy before sell that's holding this range came from here. So if there is a reason to protect positions and keep moving in a given direction, I expect either A, price to come and hit this MB and not go any above it, or maybe an absorption, right? It might absorb into this one, but we don't use that. We don't think about it that way. So come into this one and go. That's phase 1, or come into this MB and go. This will never be a thing where I'm like, I want to see it come here and I'm going to confirm here. Do you understand that?
Yeah.
Because again, from a standpoint of theory of where buying before selling is happening, if I want to see smart money protect their position and then move it in a given direction, I expect that to happen either one, just keep going, or come here and go into this MB, or keep going into here and go. In my mind, if I see price theoretically come here and then start going, do you think I'm more so expecting it to clear this low or to actually potentially come up deeper? What do you think?
Deeper.
Yeah, so this is a small nuance because, when I say something's bearish, we expect bearish, right? So in this case, theoretically, this is always more probable. But due to the fact that we invalidated the protected range here and we haven't entered any of the MB range above, I would actually expect, so again, context, that this inability to hold this range means that price either wants to attack a deeper range, right? Which means that it's actually more likely to start taking out these highs to the top side, even though it's a bearish market. So you see where context can come in a very, interesting way here.
Yeah.
This is, again, I think this is much more advanced. I'm sorry that I just jumped into that because, maybe it'll help you down the line.
This is very good. This will help. This will help very much.
Good. I'm glad. That's perfect. So just very quickly, that's an example of, a double MB where the second MB is protected at a lower place than what you would expect, right? And you can have unusable areas within it, even though you're still valid in this range, right? So that's the idea there. You understand?
Yes, I understand.
All right, so let's jump back over here. So again, let's start with this break. So this break happened. You already showed me this rule. Good. So what's the low of the range? So draw out the low of the range for me.
This one.
Yep, very good. And then find me the swing high that would make, the high, and draw it the way I drew it back here and over here. Draw the swing high that now makes up the range and why it's a swing high and why that's the range high. Yep. And then draw the two swings on each side. Sorry, I'm drinking some water. Oh, no, sorry. I meant like this. I meant swing, right? That makes it a swing. That makes it the high. Boom, like that. You see?
Okay.
Because the idea is like, look, this is technically the low, right? And then it keeps liquidating. Technically the low keeps liquidating. Technically the low keeps liquidating. And then finally you have swing, and that can define a low for you, right? With these things. So that's how you can also define a low. That's why when you see me sometimes, like let's say there's a break here. This isn't a break. This is intermediary, right? Because we have this low. But let's say this was a break. My low that I'm going to use, a lot of people think it's this one, but no, it's going to be this one because that's the first swing. So that's my low. And this is just absorption. I'm waiting still for this break, right? You get that?
So here on the left, is this one the swing?
No.
Right?
So you can keep following it technically because you're going to have times, like if you're on a 1 second chart, you're going to see this a lot more where you can have like, let's say this down candle. So here's this down candle right here, right? Then you can have an up candle. There it is with a high. And then what you can have is you can have a gap that goes like this and then breaks this high. So here, this is still a displacement. This is a BOS. But the low, because it's meeting the rule here, is here now. Low, and now this is the high. You see that? So you still need to think about these as like still breaks a structure, right? Each one of these here are a break a structure. But every time they broke, the rule is still met here. You see that? Theoretically, one of these could open here and then break again. And the new high will be here now because that's a displacement now, right? There was enough buying to gap it above previous liquidity, aka smart money participation, before the next breakdown, which means that is the new protected high. You understand that? Okay. So, but the next way that we will identify an actual high or range low is when the first swing happens. Because again, many people, they will see this low and then they'll see another swing and they'll be like, oh, this is the low. But no, for me, this is still the low because that was the original swing. And now there's no displacement until here, right?
Yes, I agree.
Okay, cool. So you're correct, right? You have a high here, you have a low here, you drew them out. Now draw for me the main MB of this range. No refinement, again, just the main MB. So if you were a buyer, what MB would you be a buyer from? Yep, perfect. Exactly. And again, very well done. Nothing else matters. This one here, this high, does not matter. This one in here doesn't matter. This fractalized one doesn't matter. None of that shit matters, right? This is the main MB. And then from there, we can push further, right? So, but look what happened. Look what that understanding just did for you. You know that this move here was the mitigation of that MB. Mitigated for the purpose of either taking out next high or failing back down. And we failed back down, right? So now you're starting to see some more ranges. All right. So where's the next? What's next?
Yeah. So we draw here. Oh, it's not very under.
Don't do it. What do we call this? Before we continue, what do we call this right here? What do we call this? Hello.
Intermediary.
Yeah, perfect. Exactly.
Hello?
Yeah, intermediary. Yep. Right? So, but that's good. So now you're starting to also see that theoretically, let's say you were very, very, very bearish on this market on a higher time frame. Like you're super bearish. And you want to see take out this low and like a low here. Well, even though you're in a bullish range, this intermediary break can still be a reason for you to go short. And theoretically, you know, you have your MB right here, right? And it does provide an opportunity. Now, again, do not think about trying to use this right now, especially if you're not profitable yet. I really don't suggest it because it's happening everywhere. But this is a great example of like, if this was EU 3 months ago, I would have traded this. You understand? Like that kind of context, I'm happy to take things like that because of the context of that market. All right, so let's keep going. So where's the actual break then? Okay, great. Now pinpoint where it came from. So where's the buy before the sell? Perfect. And where's the low of the range? Yep, that's the MB. Perfect. Yep. And the low of the range? Perfect. Yep, exactly. So this is good that you drew that because, again, some people would say it's this one. But again, once this became a swing, that's the low, right? Now, let me ask you this. If this candle right here made a big wick like that, are you going to update to that low or no?
No.
Perfect. Good job. And what do we call that instead? What is that?
Absorption.
Fantastic. All right. Very good. And now look what happened with your MB.
It mitigated.
Mitigated and beautiful drop-offs. And this is where really good trades come from. And what could you have refined your MB to? Show me some examples of refinements. Show me the fractalized MB refinement before we even do the S&D. Where's the fractalized MB?
Here.
So that would be a hidden S&D. That's a hidden S&D. A fractalized MB, right, aka one or more candles, would be from this low to that high, right there. You see that? Because that low created that high up there. So again, more than one candle, aka an MB, unmitigated, because again, it's an MB, and already could have saved you some potential losses, right? Now, how could you further refine? Sorry, yeah, go ahead.
I thought here also fractalized MB, right? From the
so yeah, this is also fractalized. I call them hidden, but whatever. That's fine too. The reason I wouldn't use this one personally, right, is because this one right above, just this S&D, is unmitigated, right? So again, this is personal refinement criteria. This is fine. This is up to you, right? There's a lot of refinement that you can do, right? Because again, theoretically, if you wanted to, you could trade every zone like this with the main MB, but it's going to be much less profitable because, well, you're trading, and you're trading a very big zone, right? In this whole zone, you're trading 50% of the range. So you need to be like, you need to be like maybe doing a CS entry. Like maybe you wait and then first up candle, boom, CS, right? Like that. Oh shit, wrong one. Sell. So you could be CSing this up candle, boom. That could be your first sell. It looks like it loses instantly. Next sell would be this CS candle, top above the high, and then this could be your trade, right? But again, you lower your RRs because when you increase your zones, you need to confirm with higher time frames or much bigger time frame confirmations, which means that you're going to get bigger SLs. But again, it depends on who you are there, right? This is up to you. But yeah, you're correct. This is also technically a refinement you can have. So again, it seems like you actually got it down. It's just that there were some, you would miss some of the rules because you'd be studying them from a more, you kind of go all the way as far left as you can with your eyes instead of the immediate break, right? Because the point of starting left to right is you define the ranges you're in and then you focus on the actual things going on, right? Because you already started back here at certain ranges and now you can follow what's going on. And when it breaks, you go, came from this high, okay, then broke that, came from that low, and then broke that, came from this high, and then you can follow that through, right? You don't need to go all the way left now because you did that by starting your analysis at left to right. The problem with other people is that they will, if this is live market, they'll do this. They'll say, okay, we have a high, followed back, rule, done. That's my high to low. No. Because you don't know what it's been breaking. This would be, in my mind, intermediary just because you haven't looked at where it is. Even though it might be correct, this is intermediary now because you haven't looked at where it's coming from, right? Because orders are transitioning back and forth. And if you're looking at the immediate break every time, well, you might be missing the range you're actually in and where these buys and sells are coming from, right? Okay, cool. So we understand how it seems like you understand MBs, or like the main MB at least, right? Refinement is again more choice. Yep.
So maybe we can go over my analyze.
Yeah, sure.
So
wait, before we do that, I'm going to ask you one more thing. So now you don't have to go slowly. You can go as fast as you want. Pinpoint and show me on this specific chart the exact range we're in right now. I want you to show me the high and the low of the most recent range and draw me the MB. So I'm going to delete everything. You can do it with your eyes. And then draw. The only thing I want you to draw is the range we're in. So like if you think we're in the end in this range, this high and this low, that would be what you draw, and you would draw me this MB, right? That's what I want you to do. So just do that for me for the most recent here. I'm going to do it like this. I'm going to replay just somewhere. Boom. I want you to draw for me. Here, we're going to start here so you have all the data that we had back here. I want you to draw for me wherever you think the most recent high and low of a range is, the MB, and then that will tell us whether you think the current time frame. Let's say this is the only time frame that ever exists right now. And I'm going to ask you, what do you expect this market to potentially do based on the specific range we're in right now? So go ahead. Take the board.
Yeah, in the past I will check this line here, but we just discussed that this was not a real swing low because we have here also.
It's okay to still check that if it's far left, right? Because again, the rules are going to catch up, right? Because even though this isn't the proper low, once you follow this, you're going to start seeing the highs, and those are already being broken. So you know that no matter what, right, either it's in here or here or here, because you're getting that break, this is still accounting for all of that, right? So it's okay to start in like bigger zones like that. But again, don't draw anything for me except for the actual final range. I'm going to mute myself for 1 second. I have a call just on my phone, and then we will resume.
Okay.
Okay, we're back. Keep on going. You're good.
Okay. Yeah, I was still looking for it. And
yeah, so like you can see, with experience, this is going to become a lot faster. Like I'm sure you've seen me do outlooks and you're like, what the fuck? But it's only because I've spent like, endless amounts of hours doing the exact same rules over and over and over again. So you will get to the same point, but right now it's okay to take your time to spot every range as you need to, and then you're going to learn to see things for yourself a lot faster.
So here, swap shell. I think this is the low, but I'm not sure about the high.
So I only want the most recent. So keep drawing, but I want the most recent range. So based on the price action that's right here, I want you to show me what range we're in right now. Like, what's the final range that you decide is the range, and the technical MB that we would be following because of the range.
Yeah, I think these two.
Yep.
Those two.
Very good. Yeah, that's the range. This high, this low, that is the most current range we are in. So what does that make us overall? If this is the only time frame we ever had and we're not using any double MB rules or anything, what are we expecting from this market next?
Yeah, can do this, but
Yep,
can
exactly. That's
also
it.
do
That's
this.
it. No. Bearishness. That's all we think. Bear.
Yeah.
That's it, right? If this is the only time frame in existence and we don't use any rules of double MB or multiple MBs or anything, then the immediate answer is this is a bearish market. That's it, right? Now, again, that's going to change a lot based on what you start looking through, of course, but that's all it is right now. Now, based on as I was watching you do it, so some pointers, okay, is try not to fully like draw in these lows, because when you do that, you might get confused and be like, oh, look, it didn't break it yet, so we didn't break yet, right? If you're seeing this and you're like, boom, it broke up, keep following it. Say, okay, that would be the high. Oh, it broke up. Okay, let's keep following it. Oh, it broke up. Oh, and then there's no more break. So where did the low come from? Follow it, follow it, follow it, follow it. Boom. Draw the low. It broke. Right? These are kind of not necessary. So in a bullish market, you're really just looking at the highs to see what's being broken and displaced. Right? Because you don't care about the low if the market keeps breaking up. Right? What would the low has nothing to do for you until you find a proper high. If this was the final high, then you go back, here's the low, and then you draw it out, right? So it's just one thing that you can add to make your own life a little bit easier, but also not to get confused, because if you kept doing this like long drawing for every range, you're going to get really confused, right?
Yeah, that's a very good one.
Yeah, so now very quickly, now we know it's bearish. Can you draw the MB for me? Do your best. So it's a little bit tricky. It's a little bit weird. So if you don't get this right, it's okay. But what would the main MB based on the things we've already spoken about? So we spoke about to the left here. Remember this break. Remember what we spoke about. Remember how when we would use this, or this, when we would use this. What is the main MB in this range that you would be looking to trade off of?
So this one.
All right, so you did not get it right. It was close, but
I was in doubt about this bigger one with him.
Nope, neither. It's this low to this high, even though it's one candle. It's a very weird one. This is like a terrible example, so I'm sorry that I did that to you, but you're correct for the most part. It should be this one. It should be this one, to put it simply. But It's actually more correct to use this as the MB. This low to this high. So if you remember, we spoke about this on EG a little bit, right? This break, this buy up before the sell came from technically here. That's where it broke down, right? But then, actually, you're more correct. This is valid, like this is valid, but it's all over the place. Like if price went short right there, you know why it did that. But the real one, you're correct. This one's like really good. This one makes sense a lot, right? Because that's where the buying came in to make the rule happen. That's the buy before the sell off. But the fact that we made this low and then the actual displacement happened here, and the displacement, look where it ended up. Did it end up above or below this point? Below. So that means that the buy up came from here, right? Remember this rule. Because it displaced below it, that's where it came from. If it displaced to here, this would be the MB. Remember that?
Yeah.
Right? So again, tiny rules, they're all the same thing, right? Notice how the rule doesn't change. But again, it takes some time just to get your mind used to it, get used to the ranges that you're working with. And then, right, you then have the addition of when do we want to stay out? What kind of rules do we have with double MBs, right? When am I staying out with 7 MBs? Blah, 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 blah. So you have the other rules that come around it, but it's all based on this function of thinking that way. And then you have the invalidation or validation of MBs based on your other timeframes too, right? Like, so if we know that like this 4 hour is officially bearish and we know that, boom, here's our MB that we're working with or whatever here, either one. These are both valid. I'm more with you actually. This one's probably better to use, right? Because that's where the buy up happened. But I would call this one to be it, right? But what we know about this move because of what we're looking at it is that on a lower time frame, this is probably a rule met. So there's probably an MB here. That makes a lot more sense probably, right? Like if we look at this, then here you go, right? On a higher time frame, it mitigate. Actually, no, it didn't mitigate. So yeah, we would want to still incorporate that because this is a very good and clean SND that's unmitigated. You see that? And notice how that's still part of this unmitigated portion. Like, I mean, I don't know what happens here. What happens? Let's see. Okay, so either way, nothing is important to us, right? It just goes right through it. But again, that refinement can save us money because a lot of people want to refine here, right? And that could be, I mean, it could be a win too, but potentially more losses. Remember, okay, so again, like I did in the recent webinar, remember this move right here for a second, and then look at the current analyzed move right here. What do you see? You see how it's the same thing? Literally the same thing?
Yes.
So what do you think is most likely on this market? To keep going or to play around and then go up?
To keep going.
Well, no, because, okay, so again, this is something that's a little bit more nuanced. Again, same thing, nuance, blah, blah, all fun. But remember what we looked at here. What were we on? Wait, were we not on GU? We're somewhere here. Yeah. So look at this move. Remember, it's one of those moves where we couldn't really establish the MB. It's really weird. The higher time frame has unmitigated portions, but we don't know. And look what happened. Price tapped into this last little area here and then went and then failed. And then now look at EG. It made kind of a weird move. The MB is kind of hard to see. There could be a valid area up here we don't know. And here's that same zone getting mitigated. So this, even though it's a bearish market, is more likely. So this is how important context can be when you get used to looking at things like this over and over again. You see that? So even though I'm still bearish on this market, because of my establishment of how I look for my zones, how I think about MBs, if the MB is clear, if it has clear refinements, I can establish to you what's most likely. And right now, the likelihood is that we're actually going to see this pull back like it did, maybe a little bit more, and then take it out. Even though it's a very bearish market and I'm still bearish. So you see how experience and just using the same thing can show you things that you, I mean, like, look, this is like perfect. It's a replica, right? I'm just going to show you how replicated this is. It's kind of crazy, but here, I'm going to do it before it does anything like this. This is what I think looks like a replica. That, because we're just at an hour, but I want to do this for you. Cause you know, it's fun. It's a good time. Okay.
Thank you for that.
And then we'll go into Paint, the best tool ever. Okay. They look like the same fucking thing. Do you see this?
Yeah, it's true.
Isn't that crazy? Oops. Ay, ay, ay. So like remember when I spoke about that whole like Bitcoin thing versus like USD CHF? This is a great, another great example of it, where you get used to seeing the same thing. And just now, we picked that area on GU randomly, and you saw how quickly I said this looks like EG. Like I don't even know where that came from. Okay, let's remember that. I go like this.
You can upload this one-on-one in the private mentorship, so other people can learn from it. It's okay.
All right, sure, I will. Here, what do you see? Look at this. It's so crazy. Weird MB with high here, weird MB with the high here, plays around weirdly, makes a move and leaves behind an unmitigated portion with uncertainty about what's going on here, moves away, leaves that unmitigated portion with uncertainty about what's going on here, makes a low, comes up, mitigates, pushes away, and we already know what happens next on this one. This is guaranteed, and this one, what am I expecting now? Even though it's a bearish market. And this is what happens to you over time, even though you're using, the same rules as me. You and me just use the exact same rules. And you even said to me, yep, based on these rules, GU's in a bearish range. And you're correct. You're fully right. However, as you get better, as you incorporate double MBs, as you incorporate multiple time frames, all of a sudden, you have completely different times where you choose to trade or don't. And that can be, and actually is, the 90% factor that differentiates you from other people, right? Because like, I could make someone an indicator right now. I could give them this indicator right here. Let me show you if I have it. Yeah, I can give them this indicator right now. If it loads. For the most part, it shows the ranges that I kind of look at, for the most part. I could give someone this indicator, and they could still lose endless amounts of money, right? Because it's not about the indicator or the ability to view ranges. It's about being able to formulate the story from those ranges, right? Which is why, again, I don't use those indicators anymore, because I just don't need it. I just look at it and I know what I'm looking for, right? And again, it's easy for me to say because I've done it for so long now. And it might be hard to look at it and be like, oh my God, I'll never be at this level. But the reality is, as I love to say, the only thing that I have above you or anyone else is, in my opinion, the ability to teach. That's it, right? I think that my teaching ability is the only good thing, but the trading stuff, easily learnable, easily taught, time and experience, and you can take off in the same exact ways. You know what I'm saying? So like, and I think that's a really important thing for a lot of people to notice, because like, just because I'm doing all this so quick and it's all wizardry and looks cool in the context and I'm always right, and I know EG looks like fucking GU from a long time ago and Bitcoin looks like USD CHF, it's like, what the fuck? It only took a matter of time to get to a point where you start seeing the same shit nonstop on repeat. It never ceases to do the same thing now, right? There's only so many ways that now these ranges can deliver, and they're all like generally the same in terms of the kind of moves they're making. Right? Oh wait, I think my headset died. Hold on, sorry. 1 second.
I can still hear you.
Let me replug this in. Oops. Okay, test. Can you hear me?
Yes, I can hear you, but I still could hear you.
You could hear me the whole time, right?
Yes.
Yeah, good. So yeah, does this kind of potentially does this help you bring like some of the problems you might have had? Does this help you alleviate those?
Yeah, for sure. Can I show you in a few minutes like what I drew first? Then I can.
Okay, we have to do last thing because we're over the hour.
Yeah,
but let me make you host.
2 minutes.
All right, sure, go ahead. We got 2 minutes. We got 1 minute on the books. 2 minutes on the books.
Okay, share screen.
Yep, you should be able to.
Yes.
I gave you permission, yeah.
Okay, you can see my screen.
Yep.
So the thing the ment blocks that are colored, like gray, that are the real one, following my. But that's before our 101, so probably I will redraw them.
Yeah, I would redraw,
But
and I would also
you
reconsider, because like there's a few things you're like here. You got this protected low, right? That's fine, right? Then you had the low, and then you didn't mark the high. It looks like this is the high, right? This looks like it broke above, right there. Maybe you see that? I think, and then breaks, and you got this one good, looks good, and then it broke up. But you don't have this MB drawn in. That's the bullish one, right? Boom. Met. Break. Right? Boom.
Yeah.
MB.
I already see what they did wrong. I did not
and look at this. Beautiful bearish. Beautiful delivery. So again, look at that. You missed one of the best trades on this just by not seeing that break right there. Right? Because price then came up into the unmitigated portion of this. Absorption, whatever. And then boom. Beautiful delivery down. You see that? Off the first MB, MB1, right there.
Yeah. I only considered the breaks of the main MBs and not the real MBs, and that's the mistake I made.
Yep. You gotta use the protected high and lows as the areas that need to be broken, right, or displaced. That's the main thing. And then after those are broken, we just move our eyes back, and we focus on the MBs that created it, right?
Yeah, exactly. But if you see the first MB that I drew here, for me, it was broken at the second one, so that's why I didn't follow anything. But
this I would try not to draw so many boxes, because that can also get pretty confusing, right? Focus more so on just the very main MBs being drawn, right? Because then you know that those are the points that need to break, and then boom, breaks. You got this one perfect, very good there. Breaks, right? But then this is the high, right? But you don't know that because, again, you're drawing this in from like some other crazy area or something. I don't even know where that's coming from, honestly. But so yeah, honestly, just looking at this, I think today you probably actually made a lot of stride in your personal way of viewing these things. And it looks like you do understand the rules. If you take a little bit more time every time you mark up, just to ask yourself if you're looking at everything right, or just relook at it one more time, I think you actually won't have many issues with viewing structure or MBs from my perspective, right? Because again, it's all rules. If we only have one time frame ever, and we're only looking at one MB every single time, you and me should technically be able to always get the exact same one. Always, right? Because of the same way that we view it. But the differences are always going to come from when you have multiple rules around this, and endless amounts of rules around this, right? And then endless amounts of rules around potentially S&D 2.0, right? Which can also change some things too.
Yeah, that's why I first want to understand exactly how to draw this. It makes no sense to create a system if you cannot draw this over and over at the same levels.
Makes sense, yeah.
But this one was really helpful. I'm gonna back to the drawing board and draw them the whole week long till I get it, and draw them every time. I'm glad, dude. Yeah,
that's all you have to do. In a month to 3 months, you'll go onto US 30 like this on your daily, and you're gonna go, okay, break, low, high, trade. Let's go. That's it. That'll be you. Again, it looks crazy, but that's how you're gonna be able to start to think, because you're gonna start to see, what you're looking for. You're going to know exactly what you're looking for. Once you it's just a matter of time, right? There's like this crazy story. I'll end it out with this story where not really a story, but it's an occupation. And the occupation is being able to check and decide which little chicken, like a chicken egg or whatever, or like a small chicken, which one's a girl and which one's a boy, because they go in different areas, right? But what's funny is this is not something that you can learn by looking at it. It's something that you can only learn by feel. So when people go and hire them, you literally have to sit next to someone and they just ask you, what do you think? And you're like, well, I don't fucking know. It's a boy. And they're like, no, it's a girl. Feel it? Okay, that's a girl. Here's a boy. Here's a girl. Here's a boy. And over time, it's something you learn just through feel. And you can do it instantly, but you're like, what the fuck? How does he know it's a boy or a girl? Chicken egg, right? So that's what's happening here. It's kind of hard. It's all over the place. Like, how does mentfx do it every single week like this on any time frame? Well, soon you're going to be like, oh, it's a boy, it's a girl. It's a boy, it's a girl. Oh, it's a bullish, it's a bearish. It's bullish, it's a bearish. Oh, it's a double. Oh, great. Here's my rule. Boom, boom, boom. Got it. Right? It's something that is learned. It's definitely something that's learned, but Well, when it's learned, it's something that you can, take the time to actually learn. And once you have it, it's GG from there on out, right?
Yeah.
All right, man.
Yeah.
Listen, it was a pleasure. I'll get this one uploaded to the boys, to the group. Thank you for giving me permission on that. I think it'll be very helpful for a number of people that need to learn how to spot these MBs from my specific rule set. So thank you. And I hope that little bit of theory at the beginning, you don't feel like it was a waste of time. I mean, we're at 1 hour 15, so hopefully we're okay there.
No, we are totally okay.
Yeah, but now you understand the theory, so you don't only understand why we're just drawing randomly. You also understand the theory behind why we're drawing it the way we are, and how even if we technically zoomed out, we could still do the same thing from a little bit of a different subjectivity standpoint, right?
Yeah.
So yeah,
I had to unlearn something, because in the first sections you teach from go to the 50% level, but now it's completely different.
It's shifted big time for sure. Yeah, I've refined my own system in so many crazy ways, but it's hard to just I can't make a new course right now and be like, all right guys, this is how you do it, and people are gonna be like, what the fuck? So that's why I think this progression thing is so important, because you literally get to see how rules are molded, right? So yeah. Well, I'm glad you were able to take it, man. Listen, have a great Monday on your rainy little day. I know it's late for you, so have a great Tuesday and rest of your week. I'm glad you enjoyed this. I'm gonna get this uploaded, and yeah, man, it was a pleasure talking.